watching us today. I'd like to call the Senate Finance and Appropriations Committee meeting to order. And April, can you call the roll, please?
Yes, Madam Chair. I'll start. Senator Saslaw. Senator Norman. Senator Hanger.
Here.
Senator Lucas.
Here.
Senator Newman. I believe he's here.
I'm here, sorry.
Senator Ruff.
Here.
Senator Vogel.
Here.
Senator Barker.
Present.
Senator Edwards. Senator Deeds.
Here.
Senator Locke.
Present.
Senator Peterson. Senator Marsden.
Here.
Senator Eben. Senator McClellan.
Here.
Madam Chair, you have a quorum.
Thank you, everybody. I'd like to turn to our agenda for today. We'll start with the 2021 interim committee activities as we look toward a special session to appropriate the additional federal funds Virginia will receive under the American Rescue Plan Act of 2021. We have a wonderful opportunity here to invest this funding in Virginia's future. As many of you are aware, the Democratic leadership in both the Senate and the House recently agreed with the administration on allocating these new federal funds to 5 broad areas to help with the following: public health, small businesses, workers, public schools, and lastly, to fully deploy broadband throughout Virginia. I do want to mention, however, that while these broad categories have been made public, it does not preclude our committee from working together over the next few months to more specifically discuss and plan for the allocation of these federal funds, particularly for the areas where there is some flexibility on how to spend them. I look forward to working with all the committee members on this topic. And again, these investments will allow Virginia to have a brighter future and emerge fully from the pandemic. Turning back to our agenda, we'll first receive an update on the positive April revenue report from Secretary Lane. It's very good news. And he will also mention this discussion on federal funds. This will be followed by Megan Healy, and she will provide an update on the Virginia Employment Commission and unemployment compensation. Then Joe D'Amico will provide us with an update on the projects related to Capitol Square and a brief update on one additional project. And then we will conclude with an overview by the staff on the federal funds related to the American Rescue Plan, a very full agenda. Should we look like we'll go past noon, we will put off the last report until our next meeting. And now I'll turn it over to Secretary Lane. Aubrey?
Good morning, Madam Chair, members of the committee, and thank you all for having me here today. As the Chair Howell pointed out, we do have a very, very robust report for today. It's the largest in monthly increase in the 21st century in terms of revenue collections on a monthly basis. Now, a lot of that had to do with the tax filing due dates that were changed, and last year many of those monies weren't received till June. This year we'll get them in April and May. But even that fact notwithstanding, it was still a very robust month for revenue collections, and I believe these trends are going to stay on this pattern at least in the foreseeable short-term future. And we'll have some issues maybe to talk about what may upset this as we go forward. And that's what I thought I would do today, Madam Chair, is just to go through not so much where we've been, but where we may be going. As a little perspective, as you mentioned, you have a large task ahead of you, the appropriation of not only probably a budget surplus, but also the American Rescue Plan monies, which will be substantial. So I thought it might be useful to sort of maybe the environment in which to consider using those funds over the next few years, since many of them, they don't have to be used for 4 years. And then I would just do a very brief overview of the American Rescue Plan. I know April and the staff are going to do much more detailed, but just a sort of an overview and talk about what you did about the relationship with the administration and the legislature going forward on how we're going to get these monies to the constituents. I also would point out, Madam Chair, there's a lot of slides. I'm not going to spend a great deal in going through every one, but I wanted your members to have some documentation if they could refer back to. So let's go right into the national and state economic indicators. First of all, let me start off by saying I think the biggest risk to the economy is no longer the pandemic. With the vaccinations increasing, with the amount of infection going down, and it looks like the vaccinations are very, very effective, more so even in the real world than they were when they were being developed. I believe we are now switching from the effects of the pandemic as we come out of this to what impacts, if any, inflation may have on us and what that may mean to policy. And I think that's a bigger risk than the COVID pandemic going forward. Point out the first 3 bullets. Certainly, the gross domestic product rose at a historically high rate of 6.4%. That's coming off another quarter in the fourth quarter of last year of over 4%, and that's expected to continue at least the next 2 quarters. Now, you would obviously think that's realistic because as things open back up, but it's still a very, very robust amount of growth in the economy. And some of that is not driven by productivity, which we'll get to a little bit later. Payroll employment continues to rise, but there was a little bit of hiccup in April. Only 266,000 jobs, actually far below expectations. They were expecting over 1 million jobs to be created, as you would expect, coming back with more businesses coming online, restrictions being reduced. And this is a little bit perplexing based on that job postings hit an all-time record of 8.1 million across the country. That's the largest on record since they've been keeping that since 2000, year 2000. And yet the job growth looks like it's stalled a little bit. And when you combine that with the next bullet, our unemployment rate ticked up a little bit. And now that's again expected as more people come into the workforce. But when you look at only adding up between 2 and 4% of jobs, there's a disconnect between the amount of jobs out there and the people filling them. Now that may be from several sources. Certainly the pandemic and people's safety still reflects on that. There are other factors like childcare that may haven't opened up yet that will allow more people to return to work. But I also have to mention too that the unemployment that is still in effect is causing some anecdotal problems for restaurants and things like that as people determine what is in their best interest in terms of collecting the unemployment or returning to work. And so a lot of different factors here, but I just point out that there right now is a disconnect. Possibly that'll get resolved as we go forward. May and June will be very important months to look at as job creation to determine if this was just a blip or if it's more of a trend that may cause us some issues. The other things on this page just talk about how confidence is returning, which is all good as you might expect with the restrictions being lifted and people feeling more comfortable being vaccinated. Okay, next page, please. I would point out a couple of things here. In addition to the economy growing, so are rising prices, energy prices in particular. but other prices are rising, and that is continuing to go up as core inflation continues to rise. Now, I'll talk a little bit of that on the next slide, but just wanted to point out, along with this growth, there are some inflationary trends. The question will be, are they temporary, or are they something that we'll see ongoing? And I'll get to that in a few minutes. Now, even on top of all this, the Federal Reserve is taking a little different tact. It's basically saying they're still not going to change either interest rates or any type of their other policies for the foreseeable future. That's a little different than the way they have traditionally acted coming out of recessions, in that as things heat up, they tend to try to moderate that. Whether that's good or bad, I don't know. Although I will point out, the Fed doesn't have a great history on getting this exactly right. We tend to undershoot or overshoot, and that's not a criticism of them. I'm just saying nobody here exactly knows where it's going, but it is unusual for the Fed to say we're not going to change policy no matter what for the next couple of years. That'll be interesting to see if that remains their target as things continue to come out. The final bullet I point out on this page is that for Virginia, we've experienced similar actions that have gone on at the federal level. Our unemployment rate is up 5.1% versus 2.5% last year. And while that's not good news, it is good news as it reports or relates to the American Recovery Plan, because we will be able to receive all our monies up front, because the criteria is that you have to be 2 percentage points above March of last year and your unemployment rate. We are, and therefore, while not necessarily being good, it will allow us to get all the monies up front, meaning that $4.3 billion that the state will receive will go into our bank accounts. I know interest rates are low, but even at a half a point, that's somewhere around $200 million a year, and I'd rather us have that to use for you to appropriate than the feds to hold on to it. So just a little bit of update of where we stand at the federal level and at the state. Next page, please. But I thought as to where we might be going, what struck my attention, I read the Wall Street Journal every day among many other magazines, and but the headlines of this particular day sort of struck me as sort of a little synopsis of where we might be headed and sort of summing up what's going on in the markets. The first is, I'll point out again, consumer prices rose 4.2% for the year. That's the biggest since 2008. Again, fueling worries of a rate hike or inflation, which we talked about a little bit ago. So since the Great Recession, or before the Great Recession, that's the largest increase. Again, could be all related to the reopening of the economy. But there are 3 price trends to watch, or how you break it down. Another headline, we're returning to normal. So airfares are a good indication of that. They weren't flying, now they're coming back to normal, getting back to supply and demand. Obviously, we know they're going to increase. Some other transitory things are used car prices. I don't know if any of you try to buy a car or to sell one. If you're trying to sell one, good news. Everybody's advertising 130% of blue book value because of the supply chain disruption. So we'll see if that gets fixed, whether that is just transitory or if there's something else going on there. But there are some trends of rising costs. Suppliers, commodities, inputs are rising. And restaurant meals are a pretty good indication of that. That is one thing to watch as we go forward, because they both have inputs from their food supplies, but also labor supplies. So we need to watch those as to determine if this is something that's temporary or it's going to be more felt in the economy. The next headline, talking about the labor supply, demographics are not looking good for the labor supply, and that the population growth in the past decade was the slowest in generations. Everybody thought we were going to be a baby bump from COVID. That does not appear to be the case. So there's going to be a long-term pressure in finding workers. I would suggest to you immigration policy is going to play a part in all this, but otherwise we're going to have a labor supply problem going out. The next headline is something that we've experienced here in the Commonwealth, and we'll see it in our revenues, that house prices have been rising. And while that may seem good, the lowest cost housing markets have seen the biggest price increases. So many of these policies, while being seen good for the economy, are hurting those at the lower income and pricing some out of the of home ownership because of the increasing in prices. And whether you're looking at workforce housing or just simply wanting to get into the home ownership, unless you have a home, it's going to be hard to do that because prices are rising so quickly. And we'll see if that reverses or if that's going to be a trend. But really the thing that really ties this all together for me relates to the federal debt. The deficit hit a record for the first 7 months of this year, 1.9 trillion, the first fiscal year of the Fed's, 1.9 trillion through October of April of this year. So what we're seeing is not being this increase in a lot of these economic activity is being financed by fiscal policy coming out of the federal government that's being monetized by the Fed. Monetized meaning the expansion of the money supply. The money supply increased 39% this year over last year. And so it's being financed, which is therefore driving up the debt. So long term, obviously, the more debt we have, that leads to inflationary trends too. So just giving you a little bit of both some short things, short term to watch, and long term as to what may generate fiscal policy or monetary policy coming out of DC as things get better. I'll just end here. This past year, last time we met, I explained that what was going on in Virginia was probably reverse sequestration, that all those industries that are hit in a normal downturn were not. Defense spending was increased. A lot of our tech companies, all those high-paying jobs were hitting on all cylinders because they were able to work, not being closed down by the pandemic. Typically, when we start looking at balancing the budget, one of the first areas that is looked at is defense spending. And we all know what sequestration means to us. So I just point this out, not so much to say exactly what's going to happen, but the direction we're headed and what are some possible fiscal and monetary policies that might impact Virginia coming from the federal government. Next page, please. This is a picture that sort of shows what we're dealing with right now. You can go back a year ago, we had a 2-month recession, and quite frankly, it doesn't even qualify as a recession because technically it has to be 2 quarters of negative growth. We didn't have that. We had 2 months, basically, back of April and May of last year, and then we started pulling out of it. And this graph, it's about a month old, but it gives you an idea of where we are. That red circle is where we are climbing out of this, pulling back jobs into the economy. And of course, we've had a lot of things to help that. The 1.9 trillion American Rescue Plan, obviously the CARES Act before that. They're anticipating the Build Back Better, which is the infrastructure package. And of course, on the society side, in terms of health, herd immunity, we're not far away, continuing on with vaccinations, plus the virus that we've already had in the community. We're heading towards herd immunity. What strikes me as being different here than any other time that I have been involved in business is the Fed, because the Fed is continuing to taper quantitative easing. That's a technical term to say they're buying any type of suspect fiscal assets like mortgages. They're the buyer. You can't sell a mortgage. The Fed will buy it. That's propping up a lot of industry. And of course, they're saying at least and not until a year from now and maybe even later before they start to talk about raising rates. That's a lot different than the Fed of the past, where they really looked at unemployment and inflation, and they were the two markers. So I don't know how this is going to act or how they may change. I just point that out, but they are signals that they're not going to make any changes as we come out of this. They believe it ought to be transitory. Let's hope they're right. But that sort of sums up where we are. Next page. But it's not just the United States that's doing this. All the countries around the world have been impacted, and many of the major governments have poured monetary and fiscal a stimulus into their economies. I will point out, though, here, we're a little bit different. If you look at those 2 months that we went down last year, while they were down 30 and 40% as a monthly, on an annualized basis, that was still only about 7% down on gross domestic product when we analyzed it. However, you can look at this graph, and to date, we have already put in almost 24% of economic stimulus, a monetary stimulus, 4 times the impact of what COVID actually had. Now, I'm not suggesting that it was evenly distributed. Don't get me wrong. If you've been impacted and not open, you still have a lot of issues we need to deal with. But in terms of a macro impact, 4 times the amount of damage to the economy has been put in as economic stimulus. That tends to be inflationary going forward, as has been our history. We'll see if that's what happens going out. And again, we're not. It's not being generated by productivity. It's being financed at the federal level for debt expansion. Next page, please. And just to give you a little idea of how quickly that is growing, in 2000, the United States had a $5.7 trillion deficit, and we were in a budget surplus in that particular year. Then we had 9/11, obviously the Great Recession, and in the next 10 years, that surplus or that deficit grew to $13.6 trillion. Then, of course, now we are just finished year 2020. We doubled it again. At the end of 2020, our deficit stood at $27.8 trillion. And if you look at the bar graph to the right, it's not a political statement. It's been going on all administrations since 16, but it's also expected to continue over $1 trillion each year for 22, 23, and 24. And that does not include if we finance the infrastructure package. This will cause issues on the debt ceiling at the federal level, which tend to be political. So I point this out here that, again, these tend to be inflationary, long-term inflationary, and they tend to require fiscal and monetary adjustments. We'll see how that actually impacts policy coming out of D.C. as we go forward. So we'll get into the details on the next slide, please, of where we are. But I wanted to give you a little overview of the environment I think that we are in. And as you all know, the federal moves mean a lot to Virginia because of the mix of our economy. Now, having said that, as Madam Chair started out in this introduction, we had a tremendous month. And on a year-to-date basis, our revenues are running ahead of our forecast by over 10 points. We're at 12.8% versus 2.7. In monetary terms, we're $2.165 billion over the prior year. We're $1.7 billion over our current forecast. However, both of those have to be adjusted because of our tax filing season. We're going to have lesser receipts in June. I actually think if we were to look at it right now, we're about $500 million ahead of forecast. And that has to be adjusted. And just for, I went back and looked at a chapter 1289, the original forecast that was adopted by this body a year ago. We're 1.4 billion ahead of that. Now, I don't think anybody on this call or myself anticipated that we would be there based on that. And again, that a lot of this has to do with the actions taken by the Fed and also the fiscal stimulus, but also the resiliency of the Virginia economy. I did go back and take a look at whether there were any policy changes that we had done, either tax or other, that may have led to this. Certainly, we had a couple years ago the Tax Cuts and Jobs Act. While we didn't change much policy, the feds did. So in terms of generation of revenues, it's still fairly consistent, with possibly the exception of some corporate taxes that could be a benefit. That's hard to tell, though, because they're much more profitable than they were in the year in which we did this. In that, certainly we put the sales tax, we started taxing internet sales. However, that was really not a policy change. Certainly it was, you passed legislation, but they were supposed to be giving us that in use tax anyway, but we didn't have nexus. So I don't see a great deal in here that's caused by policy changes the state has made, but certainly a lot of the input coming from the federal authorities. Next page, please. Good news on withholding taxes. This is over 60% of our revenues. Again, it is growing very strongly. You remember, we were expecting to grow about 6.7% or a little over 6% from January through June of this year because we knew we had some closures last year. And there was we were unsure as to whether we would attain that. I don't think there's any doubt that we will have that. So that's good news for us here. Next slide, please. But I did want to point out, even though this is a U.S. slide, it's similar in Virginia. The higher the wage, the more quickly your job was put back in place or you weren't impacted. The low wages were impacted more. In fact, on the national level, we lost 22 million jobs. We've gotten back all but about 10 million of those at the federal level. In Virginia, we lost 440,000 jobs at its peak. We've gotten back all but about 180,000 of those. So still a lot of work to be done. But just wanted to point out and remind you that this impacted lower wage citizens much more than it did the other ranges as we look back at how this was impacted. Next slide, please. Non-withholding tax collections are a significant amount of money for us this year. This will be the third year in a row that we will have, I believe, significant collections in non-withholding. That is atypical for Virginia. Typically, after we have a good year, the next year you don't. Remember, we talk a lot about that. Last 2 years, that has held up, and it looks like it's going to hold up this year. A lot of that has to do with wealth generation. The stock market, as you recall, a year ago, it took a big nosedive, but we expected it to increase. It was the S&P last year about this time was around 3,200. I'm looking at back of last year, and now it's at 4,100. And remember, a lot of people were selling in last year because of the downturn. So it looks like wealth generation is going to remain strong. And even though we have a lot to collect in May to offset what we collected last June, it looks like we're well on that way. And in fact, I would say we have an upward bias. This could cause the surplus or the excess of revenues over expenditures to be higher than what we might expect it to be in that. Next page, please. Wrapping up, the other component of individual income tax is individual tax refunds. Nothing stands out here that would think that we're going to be having a significant amount of refunds going back. It's pretty comparable to last year, with one exception. Many part-time people did not have jobs last year. Many lower wage people didn't have jobs where they would have last year. Probably would not have had to pay much tax and get a refund. This year, the refunds are down in that level because they weren't working. Of course, we don't tax unemployment benefits. And so therefore, we're seeing less refunds in that wage group, but many of those still had income because of the unemployment benefits that we don't tax and the direct transfer payments from the federal government. So overall, in income taxes for individuals, both withholding and non-withholding, withholding right around our budget, non-withholding exceeding it as we look out going forward. Next slide, please. Growth in sales tax collections continue. This has been a trend. While incomes might have been impacted, spending not so much because of the transfer payments. And of course, again, here, internet sales are a large part of this. As we move forward, I do see this trend continuing because a lot of the stimulus has still not worked its way through the economy. For instance, the $4.3 billion that the state's getting, we haven't spent any of that yet. We haven't actually received it, but that's going to work its way through. So there's a lot of tailwinds that'll be going through. Next slide, please. And that's why I wanted to just point out that our incomes really weren't impacted, which is unusual for a down. And so that for some spending was changed. You remember they switched from our citizens and consumers switched from going out to restaurants, but they started spending on their houses. And therefore, we saw an uptick because of that. So again, federal fiscal stimulus helped a great deal here. Next slide. But there's also another impact here, and that is commodity prices, their increases over the previous year. Whether you look at this source, I did have a call yesterday and said some people thought that the source here, the most important news, may have not been the best source to use, but I would point you to Reuters or Forbes or the IHS markets that we use. There's no doubt recent inflation trends include commodity prices up these levels. And if you've gone to Home Depot and tried to buy lumber, you know you're paying 3 times what you did a year ago. That's why housing is drawn. I have my home insurance is premium and renewal is up in June. I got the renewal. And of course, the replacement cost of my home is skyrocketing because of the prices of lumber and also crude oil, which is in all shingles that we use. So, you've been at the pump, not even because of the Colonial Pipeline shut down, you know you're paying more for gas than you did a year ago. So whether or not these are long-term, I don't know, but consumers are having to pay these prices, and many of them at the lower income level are getting harder hit than elsewhere because of these increases in prices. Next slide, please. Now, we do expect to see a transition in sales away from some of the home goods back into restaurant sales, back into services, which was our trend before this little blip. That line shows a little blip that happened because of COVID-19. We do expect that to reverse and to pick up in those industries that were shut down. So more services, probably with less durable goods as we move forward in that. But just something to point out, I don't see this trend stopping in terms of sales taxes being strong. Next slide. Corporate income taxes, hard to determine. They are up to last year significantly, but again, so is the tax filing period. As I mentioned, there could be some tax cuts and Jobs Act policy in this regard. We're in our 3rd year of that, and we did expect that to increase, but it's hard for me to tell because I haven't seen like for like what the earnings of there are. So we'll know more of that as we finish up this tax year. But again, see nothing that would tell me that this is going to be less than what we're projecting. Next slide, please. Recordation and insurance premiums. We've talked about this and previously. We are benefiting from the high selling prices and activities. If you tried to buy a house, you know that you probably are having multiple offers you're competing against. And you probably got to, if you have any contingencies, you don't have a chance of getting a house because that's how hard the market is. And a lot of that has to do with supply. That's what's driven up lumber prices if you can get the labor on top of that. So this will certainly continue for the rest of this fiscal year. I don't know how this trends continue as we look forward. Next slide, please. Particularly when you look at the housing, looks like it's near peak. And we also know that mortgages, if you haven't refinanced your mortgage by now, chances are if you do, it's going to be at a higher rate as you move forward. So we do see this backing off a little bit. As you recall, we did not increase our forecast for this in the next fiscal year. And it looks like the headwinds, that might be a good call. They are gathering here as we look at how people are responding to the higher prices. Next page, please. But this all adds up to a very good performance for the first 9 months of the year, or excuse, for 8 months, May, June, no, first 10 months of the year, excuse me. We've got May and June to go. We can be down over 30%, and that which we're not going to be down that much for the remainder. In fact, I would calculate we're going to have a surplus that's at least half $500 million, and I think there's an upward bias to that. It could be more than that, substantially more, depending on what the collections of non-withholding are. Next steps, next slide, please. Our next steps are we'll just have to see how that comes in June. So we can compare apples and apples for the last quarter. But again, Madam Chair, I think this is going to be a very, very good revenue collection month for the things we've talked about, and see those trends continuing. All right, next slide. Madam Chair also mentioned that we are going to receive substantial funds from the American Rescue Plan Act. I know your staff is going to give you a detail, but I just wanted to go through some quick highlights. You know, there was $350 billion set aside for states and local governments, local governments in this. This is a breakdown of that. Next slide, please. But here's what Virginia's getting. Virginia will get roughly $4.3 billion directly. And as I mentioned, we'll get that in one lump sum. We've already applied for the monies, and the governor has certified, and Treasury will let me know when we receive those monies coming in. Counties will also receive $1.65 billion directly from the federal authorities. Metropolitan cities, again, directly from the federal authorities, $618 million. And then our towns, which are typically the non-entitlement units.
Madam Chair,
I'm sorry.
can I just interrupt for one question to ask Secretary Lane a question?
Yes, you may.
When you say metropolitan cities, could you just explain that distinction, what a metropolitan city is compared to other cities?
Yes, it's basically population, and it's as defined, it's basically the cities in the Commonwealth and that. And so they just define them as metropolitan, but they pretty much line up, although we're a little bit different because we have independent cities, and most states don't. But, and in some cities will get, or some entities, I should say, will get monies from the different categories. There are a few that'll get some in counties and some in metropolitan cities. But typically it lines up, Senator. And I've got a detail later in here. We'll be able to provide who's getting what in specifics.
Thank
But
you.
the key is they're getting it all directly from the federal government. Unlike last time, it came through the state. And these allocations were all determined at the federal government level.
Thank you.
Yeah, yes, sir. The one exception to it getting it directly from the federal government is the last entity, which are typically towns in the Commonwealth, the non-entitlement units. 50,000 population or less, they will come to the state for us to distribute to the towns. Obviously, we want to get that out quickly. We believe we'll receive that money the same time we receive the state allocation. And so we're also told, we're supposed to get more guidance this week, that we may be even given the allocation for the towns. We're not sure, but that's what the guidance appears to say. There is one, next slide, please. There is one restriction with that. These are just some of the restrictions that go along with the non-entitlement units. You can't give more than 75% of the non-entitlement unit's most recent budget. Now, the key is, what is a budget? And we've asked for guidance on that. We'll have to reach out to the towns, primarily the localities, and get information from them, because they're not allowed to get more than 75% of their most recent budget as defined by the feds, which we'll get that definition. And so what we'll have is a certification for them to get the funds, but along with that certification, and it allows us to do a certification from the state. We don't have to audit this from the town, that they tell us what 75% would be. And we'll use that to then allocate these monies to them. At least we believe that's the way the federal authorities are going to give us guidance.
Senator Deeds.
Secretary Lane, I want to follow up on Senator Evans' question. This talks about population. Non-entitlement units are generally local governments with populations less than 50,000. A whole lot of our independent cities, especially in this part of the state, have less than $50,000. Are they going to get money? Are they going to be included in the metropolitan areas? Or is the money going to flow through Virginia?
They would be included in the metropolitan areas if they get money. That it would not flow through us.
But
They may get money from other categories, but it would
Hold
not
on.
flow through us.
Say
Yeah.
a city like Covington or Lexington or Buena Vista or Bristol or Salem or even Charlottesville has less than 50,000 people. Are they going to get an independent allocation, or is it going to come through Virginia? Come through the General Assembly?
I don't know if they get an independent allocation, it will come directly from the feds. If they get a non-entitlement allocation, which I know they'll get that because they're under 50,000, it will come through us. That's why I meant from the feds. That's why I mentioned, Senator Deeds, you could be on more than one list.
So you just don't know right now whether they are on the independent list because they have less than 50,000
I don't
people?
have it in front of me.
Okay.
They could be on there. I don't have it in front of me, Senator Deeds. I don't know specifically if they're on that or not. I don't have that breakdown in front of me, but they could be on many different lists the way the feds have done it. And I'll be happy to provide those lists and take a look at those specifics. I just don't have it in front of me right now in that regard. I was giving an overview, but I'm happy to share what we get as who's on the list. But I know that anybody under 50,000 will get an allocation through Virginia in addition to anything they may get directly from the feds. So I hope that's and I'll be happy to provide the detailed breakdown for you guys that's been given to us from the feds. So that's how the non-entitlement funds will work. Again, they'll come through the state. Everything else will come directly through the feds. And I want to, again, also point out, the states had no input in how these funds were divided up at the federal level. These were federal allocations. So unlike the CARES Act, this was federal allocations. And I know independent cities and some of the questions you were having were issues that we raised with the federal authorities, and they've adjusted their allocations, but I don't know specific cities on who's on a particular list. But I do know, again, that they will, most of it will come directly through the feds that were their calculations of how they did it. Okay, next slide, please. This is, again, the uses that you can use the COVID-19 and local fiscal recovery funds. It's pretty similar to what we looked at before. It does allow you to use for infrastructure, water, sewer, and broadband. It specifically allows infrastructure, water, sewer, and broadband. They've also said that anything that would be included in the infrastructure package to be coming would not be eligible in this. I got a specific question on school construction, new school construction, not allowed. However, if it's related to COVID-19, like an HVAC system, maybe a roof, because that has air quality and could cause things, those things we'll wait guidance on. But we know new school construction we've been told that would not be allowed, but may be in the infrastructure package that's coming. In that regard, I would also point out that these rules are very much more broad. They're very much more broad than the CARES Act rules, and I'm sure your staff will get into that. But they're not nearly as strict. So if you have a nexus to one of these uses, there's a good chance that the monies could be used for that. I'll point out here a couple of other things quickly. They haven't defined for us if you have a tax policy change that reduces your revenues, that is offset dollar for dollar from the federal funds that we're eligible. We're looking for definitions on how they're going from the Treasury Department on how that's going to be enforced. But that is one restriction on here. And let me point out one other that's a good factor for us. It appears the original guidance said that if your revenues were ahead of the last fiscal year, they could not be used for revenue replacement. They have changed that guidance, and now there's a calculation for an opportunity lost based on your historical rate of increase. So it appears that we have a chance of having some of these monies be used for revenue replacement. I don't know the number. I think it could be fair in the hundreds of millions of dollars, but we've asked from guidance from the federal authorities on how they're going to use this calculation. I know the Department of Planning and Budget's been working with other states, but it's not clear cut that we can't use them anymore. So I wanted to point that out. I don't have the answer on how much it is, but of course, that's the most flexible ways that we could use these monies. And to the extent we can use them that way, we certainly will. Next page, please. Or we would recommend to you for your deliberation that we could use them that way. Again, these are just talking about some of the recipients, how the uses, again, back at the bottom of the page, certainly can invest in water, sewer, and broadband. And then the next page, please. I would point out in these final pages, next page, please. This is a listing over and above the direct monies that we're getting in our localities. There's another $6.6 billion coming to the state through other sources. You can look down the fourth bullet or fifth bullet here. There's $2.1 billion going directly to our schools in the Commonwealth. There's $833 million going directly to higher education in the Commonwealth. So over and above the $7 billion that we're getting between localities and the state, there's another $6 billion. So over $13 billion will be felt throughout the state. Now, obviously, we want to coordinate, and many of these are non-discretionary funds, but some of them have discretionary components. But the vast majority of these are non-discretionary. And if you look through, we can skip through the next pages. I just put this in here until you get to page 32, please. That's just summing up. You can see $6.6 billion and all the different programs. Next page, please. But as I said, most of that money, not all of it, but most of it is non-discretionary, meaning that the state doesn't have a choice as to where the monies are used or how they're used. We did have a discussion with the leadership of the money committees and the governors, because we want to honor and will honor the budget language that was put in the last budget, that the General Assembly has final appropriation authority over all of these monies to be allocated. However, there are some timing differences we need to deal with, particularly on any non-discretionary money. And what we have proposed here in this letter is that if it's non-discretionary, meaning that I'll use an example like the Virginia Employment Commission getting unemployment benefits. We only can use it for that, but it has to go out quickly for the recipients to get it. So what we would propose that if it's anything that has no discretionary component at all, that those monies, if you flip to the next page, we would prepare a decision brief, which we do internally, signed off by the department that's using the funds, Department of Planning and Budget, myself, and the governor, that says these are non-discretionary funds, can only be used for this use, and we would like your approval to be able to do that executive appropriation to make sure we don't forestall any payments getting to citizens. We would then send this down to you and give you 5 days to look at it and say, we agree with that, and then we would make the distribution. If you didn't agree with that, then obviously we wouldn't make it. And any money that is discretionary of nature, then you would have to come back in special session, which is going to be the overwhelming amount coming to the state. And some of this money is coming to these other funds that it would have to be back in a special session for you to approve. So we would not in any way violate the budget language. And of course, any of these non-discretionary, we would put in the budget for you to approve also. So you would ultimately approve it after that. But we thought this was a good way to work with the legislature and making sure until you got back in session that we were not holding up any non-discretionary funds going to recipients. So, Madam Chair, that's a quick overview of how we propose to proceed. And I'm happy to hear any questions. I know it's a lot of information, but most of it's good, but just a little bit of caution for the future.
Yeah, thank you, Secretary Lane. As always, this was very informative. And as always, you had quite a bit of good news some bad news, and a whole lot of uncertainty. So we have our work ahead of us. Are there questions for the Secretary?
Madam Chair, Senator Eben.
Senator Evan.
I have 3 questions. One, I'm not sure if it's part of the American Rescue Plan, but it was my understanding that the federal government has said that the hospitality industry has to receive significant relief. Is that part of the American Rescue Plan, or is that another federal
It is,
program?
but it's directly but it's not coming through the state. That will go directly to the restaurants. Now, that doesn't mean we can't do additional stuff, but they will be getting direct allocations from the federal government.
So we won't be doing any grants. They'll just get it from the federal government themselves.
No, we may decide to do
On top
additional
of it, if we
grants
chose
on
to.
top if you chose to.
Okay.
You chose to, but they will be getting direct monies.
Okay, and most of my question was about local governments. I was wondering what plans the administration has for soliciting priorities and ideas for the American Rescue Plan allocation from school systems, local governments, and social service interest groups. Do you have something planned to get their input?
We do. In fact, we've already started that. Craig Pfeiffer in our office here has been charged working with the policy team with both VML and VACO. I've spoken directly with the Northern Virginia mayors and chairs, getting input to them on how we would coordinate. In other words, if the state was going to do something, I'll use broadband, how we could all pull together to make sure broadband. But yes, that is ongoing. Of course, the General Assembly will have to be a part of that because there's no sense. And we want to make sure we're not going down a path that doesn't fit what you guys will ultimately have to approve. But absolutely, I believe coordination is going to be key to this. There is so much money, so much. You mentioned that one, the restaurants. We want to make sure we coordinate best as possible and not duplicating. So yes, those outreach has already begun. And there's a work group, again, that Craig Pfeiffer, my team, my deputies are on. Of course, once decisions are made, the guidance that came out the other day from the General Assembly and the governor gave them some parameters to start thinking about how to coordinate these dollars. So, Senator Eben, that is going to be a lot of work, but it is certainly being started.
Thank you. And Madam Chair, if I could follow up with one final question.
Yes, please.
How will a social equity lens be applied to the decisions on the money being allocated? Do you have any special principles on how that can be accomplished?
Well, yes, twofold. Obviously, Dr. Underwood is part of the discussions here in terms of looking at our policy team. So that's it. And then, of course, most of it, the first run through is you got to be in compliance with what the particular program is or what it's desired for, and the uses will have that. But that's being the way we normal budget, Senator Evan, all that is looked at. Now, is there a special criteria? I don't know that that's been developed, but I know that we make all those decisions based on guidance from the policy team and Dr. Underwood's office.
Thank you.
Are there further questions? Senator Barker?
Yes, thank you, Madam Chair. Secretary Lane, a couple of questions. I don't know whether you know the answer on it yet. Given that we have our cities are independent, which is not the case for most cities in most others, in basically almost any other state, will they get the same amount of funds that they would get from the ARP if they were a county with the same population?
I can't answer that question. I do know that was raised because I would assume I know what they were going to get to begin with. And I don't have much insight into how the feds did this. However, we did raise that question, and that's why several of these entities, and to Dr. Senator Deed's questions, are in different pots of money. Because Virginia is one of the few, I think the only state that has this many, a couple of other states. I think Maryland has one, and I think there's another state, but where
Baltimore's a city.
Yeah, we did raise this question. The congressional delegation considered it. They changed their allegations, their allocations. I can't determine, because I don't know what it was before, you'd answer your question. So I don't know how to compare that because we didn't see any allocations before.
Just one other question, Madam Chair.
Senator Barker.
Also on the issue of local governments, I've heard there's a little bit of angst among some of the towns as to how quickly they would be able to receive the funds and not getting it if it comes through the state. And we have to deal with that as it relates to the special session that we would have. Or how is that issue being dealt with? And part of it is that their concern is that we would be in the next fiscal year rather than this fiscal year.
So Senator Barker, I would consider those non-discretionary because we're just a pass-through.
Okay.
And we would take the allocation and give you a decision brief to say, here's what the feds say we have to do. Under law, we have to get them out within 30 days. Now, the only restriction is they can't get more than 75% of their budget. And that doesn't go back to the state, that has to go to the feds. So what we anticipate would this be a non-discretionary funds that we would ask the permission from the General Assembly to treat them as that based on the allocation from the feds. Two, we would then have a certification that the local authority says this is 75% of my budget, and we would either give an amount equal to what was distributed by the feds or 75% as soon as we got that certification back. Because we know they should get the monies as quickly as possible. Everybody else will have it. I don't think that is it. We've got this, our Department of Accounts has got that set up. As soon as we have guidance and the money, we'll get that out. But I don't think it's going to be, a matter of months before they get their money. I think it'd be a matter of days, depending on how they respond to the certification.
Right.
Senator
And also that you guys allow us to distribute those as non-discretionary funds.
Senator Marsden.
Thank you, Madam Chair. Secretary Lane, what are the implications for our reserve funds based on these new revenue projections? I know that we obviously can't put any of the federal money in the bank. It's supposed to be spent, but what does the $500 million in anticipated additional revenue mean for our reserve funds?
Well, let me answer this, the reference to the feds. I'm not so sure you can't use it for reserve funds if you chose to, particularly if we can use any of his general fund revenues. So I'm not suggesting you use it or not use it. I'm just pointing out it may not be totally precluded to use as reserve funds, particularly states that have drawn down their funds. But nonetheless, I just point that out. Where we stand today, reserves, we have about $2.1 billion in reserves. We have two primary vehicles for that. The stabilization fund, which is statutorily required by the Constitution, we have about $635 million and almost $636 million in that fund. And we have roughly $1.5 billion in the Revenue Reserve Fund that is in legislation, but is obviously easier to get to with legislative approval, whereas the Revenue Stabilization Fund has specific rules by our Constitution. Now, if we were to have a substantial surplus, that would generate a mandatory deposit to the Revenue Stabilization Fund. And a good rule of thumb would be about 50%. So if we had $500 million, and this is back of the envelope, about 50% of that would be mandatory to go into the Revenue Stabilization Fund. In that, you could put the rest of it in the cash reserves, but that's not mandated by the rules of the Stabilization Fund. So I suspect about half of that would go into the reserve. That would also mean a fairly large deposit to the water quality funds, both probably A and B. And if the surplus is larger, it could trigger what's called a super deposit, which even more would have to go into that. And I don't remember all the rules off the top of my head, but a general rule of thumb is about half of the surplus would go into the stabilization fund.
Thank you, Madam Chair. Secretary Lane.
Are there further questions? Well, thank you, Aubrey. As always, you've given us a lot to think about and absorb. But basically, I think it's optimistic compared to where we were certainly a year ago. So thank you so much.
Thank you very much, Madam Chair, for having me.
Next, we're going to hear from Megan Healy, the governor's chief workforce advisor, whose title is about to be changed to Secretary of Labor based on a bill we passed this year. Welcome, Dr. Healy.
Great. Good morning, everyone. Good morning, Madam Chairwoman and members of the committee. Thank you so much for having me today to talk about the Virginia Employment Commission update. The commissioner and leadership is actually now in federal court this morning. We are expecting a good path forward with that, hopefully today, to figure out the pending litigation against the VEC. So you get me. I don't know if that's good or bad. Maybe you can decide after the presentation. But I'm going to do a couple updates. I'm going to kind of explain a little bit about VEC, where we are and where we plan to go, and then definitely open up for questions. So just as a background, I know it's very confusing with the Employment Commission. Usually during regular times before the pandemic, we had a regular UI system. This system was for anyone we had payroll data on. So your regular employee, about 80% of Virginians, we do have payroll data on. The other 20% could be your gig worker, your 1099 worker. It could be your religious. They're exempt. So anyone who's working at faith-based organizations, as well as government workers. So I wanted to throw that out there. During the Great Recession, only about 40% of Virginians actually were eligible for unemployment. So with this pandemic, they added additional eligibility. So that PUA program that we hear of actually is almost is for the gig worker. So that expanded eligibility for anyone who had 1099s or sole proprietors who actually were paid into the system, but maybe not for themselves for unemployment benefits. But it also came up with 16 criteria for COVID related. So it's always, we always talk about this UI system and then these additional systems to increase eligibility, but then also almost a paid family medical leave, this kind of program on top, which adds a huge level of complexity. This past year, 1.5 million initial claims to the system. And again, there's two types of applications. So we've over had 2 million applications for unemployment, but this is for a head count because some individuals have to apply to 2 different types of unemployment. This is 1 out of 3 workers in Virginia that have moved through our system. This past year, we have given out over $12.9 billion in benefits distributed since March 2020. We're going to talk about the trust fund. Thank you for having money to backfill that, specifically the CARES Act, and that's something probably moving forward to look at. So that math doesn't look right. When we started with our trust fund at $1.4 billion. So really with the additional federal UI program, specifically the PUA, that money is drawn down every single day from the federal government. So that is not coming out of the trust, as well as extension of benefits. So usually 26 weeks is regular UI. We've extended it 13 weeks and 13 weeks, and it was 11 weeks. And now we've extended it to September 4th from the American Rescue Plan. And so that additional funds to extend past 26 is also a drawdown from the federal government as we send an invoice up, comes in our bank accounts the next day, and distribute it out to our claimants. And so just kind of example when you're trying to think through this math. These are just basic numbers from May 8th about the initial claims filed last week. And again, this number is going down. So that is exciting. We are still receiving notices, warn notices that come to my office as well as VC of potential layoffs, but we have seen a huge decrease. You know, about a year ago, one of our largest weeks was 140,000 claimants in 1 week. That is more than the whole year of 2019. And really looking at these numbers, I always say we did about 10 years of claims in the first 10 months of the pandemic. We have seen a decline in PUA, so these are gig and 1099 workers, but those continued claims are higher than our regular unemployment insurance. One of the things that is confusing out in the press is 85.5% of Virginians actually get paid in 21 days. So these are our constituents that are eligible. They say lack of work. We have payroll data on them. They've moved within 21 days. We are the 6th fastest in the nation. And when we have limited resources and people, think about this past year, we've tripled the number of people at VEC. If it's through our call centers, we're now moving the adjudication officers, which I'll talk about, as well as just staff. You know, over 10 million pieces of mail thank you for passing legislation saying we don't have to mail everything. Every person gets 5 pieces of mail when they file for unemployment. And so just thinking about processing mail and uploading documents and posting it to, it's a lot of logistics and administrative support that's needed. Other states like Maryland is a great example. About 58% of anyone who files in Maryland will actually receives benefits within 21 days. North Carolina is around 62%. So this is something that I think we should be proud of, specifically for VEC, because this is. So really some of the hangups we have seen is that if someone is ineligible, and I just want to kind of go over that a little bit. There was recent articles, and you've seen data specifically on percentages that Virginia was last place and the percentage of claims that have been found ineligible or have issues, and then when they were resolved. There is a law, it's not even a law, it's kind of case law that says that you should state if administratively feasible, which in a pandemic, that's up to judge, but it was pretty tough for administratively feasible to resolve anyone who's ineligible within 21 days. So I just wanted to remind that there's 2 ways someone deems himself ineligible at the beginning. One is that they say they're out of work or lack of work, and then employer says, and so basically they were laid off or furloughed, and then the employer says that person was fired or they quit their job. Okay, so those are 2 reasons that somebody is not eligible for unemployment. So if that happens, if a person says, I'm eligible, and the employer says I'm not eligible, within 21 days, if that has not been resolved, that person actually moves to payments like they are eligible. So I do want to say that I think that a lot of people say that the VEC is deeming people unemployed or ineligible, and then they're waiting months. These folks are actually, when there's a dispute, he said, she said kind of dispute, these individuals are getting paid. We've paid about $181 million, I think, specifically in these cases. We get about $350 a day that we move to payment right away because of this dispute, and then they have to be through our adjudication process. If a person says, I quit my job, or I was fired, they self-attested that they're ineligible for benefits. And by law, we cannot give benefits. And then that's when they move through that adjudication process to move through to figure out why, is it a reason that they had to quit their job? Is it maybe a COVID-related reason, which at the beginning of the pandemic could have been a reason? Now, in March, that reason has gone away because you have to be able and available to return to work or get a new job. And so that's also shifted eligibility as well. And so I just wanted to kind of throw that out there when we talk about adjudications. If you refuse to return to work, so you're sitting on unemployment, employer asks you to come back, and it's suitable work, and you refuse to go to work, then the benefits are stopped, and then you go through the adjudication process as well. And then fraudulent claims. We have received tens of thousands of fraudulent claims. They do not move for benefits as well. September 4th, all federal programs end. So that is the additional $300 that's added per week. So, right, we get $378 by code in the benefits table. Most Virginians do, and so an extra $300. So Virginians until September 4th are getting $678. That is also an extension of the programs, right? Beyond that 26 weeks, which we have in federal law. So those benefits will stop even the $378. That date will be here before we know it. And so we are working really, really hard to make sure we get people back to work with our job fairs, with all the I-61 career work centers. They will be open in June, fully open in July. We have a new workforce portal. We are excited to get people back to work as well as the work search requirement, which I'll talk about. And then 5.1% unemployment rate. And then I just wanted to also talk about the 538,000 jobs that were posted. This number we know is going to increase of the jobs that are open in our VEC database. Next slide. Just as a reminder, because I know many of you are interested and have asked about unemployment insurance tax, there's 3 different tax types that we see. One is the base tax, or also known as experience tax. And this tax fluctuates up and down. So if an employer lays many people off and then hires people back, their tax rate is higher. If a person does not lay, or individual or employer does not lay anyone off, then it's pretty much a base rate. The second is the pool charge, and this is socialized across all covered employers. This did go up a little bit this year, and that's based off data from the previous year. So tax rates are set set in December. That is from the year before, the fiscal year before. So after June 30th, 2020, that's what set the tax rate starting this past January. And then the final component is the fund builder. So if we drop below 50%, then we have to implement the fund builder. Employers also, this says federal unemployment tax of $420 per employee. That is if we're not in conformity with UI federal laws. We get a 90% tax cut reduction to federal unemployment. And I also will say that with this money coming into our UI trust, that Virginia obviously has been very well off economically. Our trust was very strong in the August before the pandemic. And also our economy is so strong, there's a funding formula at the federal level that actually we paid the most money back to the federal government. We are 51st out of 53 states and territories to give money back. So that means we are probably the lowest, thinking about pre-pandemic, lowest funded unemployment insurance states. And that's been for a while. So that is one of our next steps as we've been talking to our congressional delegation. I think we're caught off guard. We're giving a lot of money to other states. We should have had this money to maybe upgrade our technology systems, our UI systems. We were down hundreds of people, if you compare us to Maryland, administratively, of personnel we had. And so really trying to work on that. Any help there for you guys to help with the congressional delegation to change that funding formula so we can actually retain more of our funds would be important. Next slide. So this is an example of the insurance tax rates. The governor decided, because that you put in budget language during our state of emergency, that there is some flexibility in unemployment compensation code section. So we worked with many of you to know that this could be that we could freeze taxes. We specifically, again, tax rates were set July 1, 2019 to June 30th, 2020. That last quarter, in the second quarter of 2020, we held businesses harmless. If we did not, we'd have had 10,000 extra businesses pay the maximum rate per employee, which was around $650. So this is basically the 2020 pool tax rate, $2.40. Again, that is socialized across all employers. The fund builder tax rate is $16. That is a requirement. So every employer, for every employee, it was additional $16. And then the average base tax rate was $71. The year before, if you're wondering, so it's $89, was around $70. So you can see that there's an increase in about $20 per employee that we did. So moving forward, again, that flexibility in language was around the state of emergency. The General Assembly there's the right to change tax rates. And so that's something we should probably have a conversation to think about. The UI Commission, this is one of their priorities that some of you sit on, to think about what this might look like moving forward. It was about $200 million that we saved businesses in December, specifically to this tax cut. Next slide. And these are just the VEC trust fund expenditures and balances. As you see that we start with $1.4 billion, and then you can see the difference of money that was pulled out for unemployment. We did take out a loan, but we have paid our loan back, and so we're pretty much even balance. We are kind of teetering if we need more money on that loan or not, but I think we're good. Many Virginians are going back to work, and that is going to solve this trust fund problem, is that the more people that are employed, the more taxes that'll come in to support this trust fund. I know there's conversation about what this might look like forward. I saw Aubrey, his example is potentially funding for VEC. I know that's going to be ongoing conversations about backfilling this trust and what does that mean? What does that look like specifically to next year's tax rates for businesses? Next slide. So the next steps is the continuous expansions and adjudication customer contact centers. So we've been working on expanding our adjudication officers. We have signed a contract for 300 additional adjudication officers. This has been in the works for many months. This is a third-party group, and again, this is kind of new to the VEC. We've always hired our own adjudication officers. There are some security risks to hiring a third party. There's 5 different technology solutions and systems that the adjudication officer has to access. We have 1.5 million bank accounts in our system. And so this contract we have been working on for months, specifically with OAG, with security and VITA. That even took like a month and a half to procure. So we know that the adjudication officers was an issue. We were trying to hire our own. grow our own and move people around, we know we have to have this third-party contract. And so this is something that finally was signed for months of working on. And we think this is going to speed up people through adjudications. We have in this last 3 weeks been working really hard moving people over to adjudications. In the last 3 weeks, they have resolved 82,000 issues to move people to benefits or to disqualify Virginians for benefits. We have about 3%, a little more, maybe closer to 4% of people that filed that still have issues on their claims that we hope to get through as well. There's 3 events that are coming up specifically in UI that will move more people to the adjudication process. One is at the end of this month in May. Anyone who's a 1099 worker has to show or demonstrate that they made some type of income in 2019. We do have some Virginians that were on their PUA that are having a hard time showing tax records or 1099. We are working with those individuals. But if they cannot show documentation, they will not have benefits. We will have the work search requirement that starts June 1, that every Virginian, if PUA and regular UI, if they are on unemployment, that they have to show us that they applied for 2 jobs per week. We have better technology these days to look at parameters. We're really going to make sure that these jobs are in a path that is possible for the claimant itself. We received guidance from Secretary Marty Walsh 2 days ago that really says, if someone goes back to, if they are called back to work, they must go back to work. We heard President Biden also say that, as well as making, what does our work search requirement look like? And then how do we aid people trying to return to work? A person can get a waiver if they're in education. We are trying to push the G3 program as well as additional CARES funds we have out in the field. So if somebody wants to move to a different career path, and we hope that career path has a living wage, that we have wraparound supports and they can get the waiver. So that is return to work. But if someone does not post 2 jobs, they will have their benefits cut and they will move through the adjudication process. And then the third, starting July 1, is with HB 2040. Anyone who's applying for an overpayment waiver also must go through the adjudication process. They have to show financial need. That form will be posted soon, as well as we've sent to all the legislative offices, kind of some directions or some FAQs around what that overpayment looks like. And so that will also be released, and that, again, will need more adjudication officers. And so that's why really important that we get this contract up and running. Call center work, we expanded call center in Van Sant, which is Buchanan County, up to 200 to 300 call center workers, and we're currently hiring. Still high demand call centers. Some weeks we take over 100,000 calls. We do have a callback feature as well. That's in the morning, but sometimes by the afternoon, we do not have that feature. Thank you, General Assembly, for extra $10 million to maintain call center staff. We actually saw a decline of funds coming from the federal government late 2020 to maintain customer service. We were not getting administrative fees or expenses for that. So I really appreciate that we've expanded our contracts thanks to the $10 million that was in the budget. And then the $5 million is added to the Unemployment Insurance Modernization Project. This is going to go live October 1. Again, this was supposed to go live last June. March, there was a disruption. We had to put it on hold. They have been working on it. They started a couple weeks ago to move to October 1 with the new modernization project. And also thanks for the $5 million that was also in the budget. It's going to support this modernization project because we're thinking included the PUA for gig workers and 1099 workers might be an ongoing unemployment option. And so that might include a new technology, or we have currently a bolt-on technology for that. And lastly, I want to talk about fraud. So we are receiving high numbers of fraudulent, what we've reported to Department of Labor is around $59 million to date on fraudulent activity. This can be in July of last year. We really cut down on fraud by looking at claimants that had the same email address, the same home address, same bank accounts to really shut that down. So we do have fraud filters on that as well. We have asked to work with the state police to send us some cybersecurity specialists to come look at our fraud as well as start an investigative to hire a lot more investigators to get through the fraudulent claims. 59 million does seem like a lot. I will say California has had $17 billion in fraudulent claims. This is a national issue. The federal government and Congress is really looking into that and trying to provide states with better fraud protection. We are also looking at different types of identity uses to identify individuals and use software. I think 21 other states have implemented this as another step to file a claim. And so we're looking into that. So next slide, I think that's it. So I would love to answer any of your questions.
Madam Chair?
Senator Evan.
Yeah, I want to commend the VEC for the 85% of claims being handled in the 21 days. But I do have some issues with those who don't get their claims handled within 21 days. We're still getting lots of calls in my office for those that know to call their state senator. And we get calls that people have incredibly long wait times on the phone. I know you said you're adding the call center or did add a call center, but I want to know how long is the average wait for someone to hear about the adjudication of their claims if it's more than those people who don't fit into that 21-day category? How long do they have to wait on average?
So the 21-day category, and that's what we're seeing as the metric for Department of Labor. I do want to mention that if you look at that data, we have been working with Department of Labor because we're always looking for continuous improvement. Like, why are we so slow? What's the issues? So interesting enough, if you look at the number of adjudications we have, we've actually done more than 37 other states. We're looking at, but our denominator is very, very large. So an example is, it says that we had 24,000 separations. California had 115. So I don't know what California's doing. 115 is a lot different from 24,000, especially when they have 5 times the population. Mm-hmm. So we are working with Department of Labor, and they say the data is unreliable, but I'm not saying that's an excuse. I think that, we are doing a lot of adjudications. We need to do better. So the average period beyond that 21 days, and again, these are complex cases. A lot of times it takes, employers have to provide documentation. We have the employees or the workers that are going through our adjudication process and appeals process. They have to provide documentation. If it's a childcare situation, they have to show that their daycare is closed. If they're sick, they have to get doctor's notes, so that takes a while. We're sitting around, probably around, we got through 82,000, so I'm not sure what our wait time is, probably around 2 months. One other thing I want to say is there's multiple levels of appeals. So after that first appeal or adjudication, when they're denied benefits, they have 2 more levels of appeals. What we're really trying to do is we have 2 types of unemployment insurance. So if we feel like they might be beneficial for PUA, we're going to try to move them as fast as we can. The VEC met with Senator Kane saying, why do we have so to get PUA, you actually have to be denied and adjudicated in the first regular unemployment insurance, and then you have to then reapply for PUA. So if you're stuck in this appeals process, then you go over to PUA, and then you can be denied PUA. It could be multiple appeals that take a long time. And so we are also trying to streamline that as well.
Well, Madam Chair, if I could just follow up.
Senator Evan.
We appreciate that we're getting a better response now for the people who are flagged by our office. We appreciate that very much. But we still hear stories that people get a call or a communication, an email or a phone call from VEC, and then they call back and there's an incredibly long wait time on the general number. Have you considered some kind of way to funnel the people who you're trying to communicate with so they can reach you? Because it's got to be frustrating for people who are unemployed and are waiting on their cases to have to wait for 4 or 5 hours on the phone or get disconnected, that sort of thing. Is that changing, or are there plans to change that?
Before you answer that, I wanted to jump in because I'm having exactly the same kinds of problems. And I am getting literally dozens of emails still every week, dozens and dozens. And I want to just read 2 of them, which came yesterday, and I think are on target with what Senator Evan is saying. The first one is from someone I'll call Dave. The VEC has in no way responded to my report of the fraudulent claim against my unemployment account, and I feel completely ignored. I spent 3 weeks attempting to contact VEC. I have written to the commissioner twice, but no response. I've attempted to fill out a fraud report, but the system does not work. I have called the VEC Commission's office, but have not been able to get through. Then a second one from someone I'll call Jean. I've called over 350 times and cannot reach a human. This is deplorable. Please help. I need this money to live. This is what we're getting. And I think we need results. Frankly, we need more results and we need them right away.
Madam Chair, this is Louise. I thought I was the only member that was receiving dozens of calls per day regarding their difficulty in getting through to the VEC. So I feel vindicated actually to hear that others are having the same kinds of problems. But I mean, these calls are coming in repeatedly every day, every single day that we're in the office.
Madam Chair, me too.
Thanks, Senator Deeds. Senator Locke.
Just saying, me too.
Anyone else?
Yes, but not as many as that.
Okay.
Same here.
Yes.
Madam Chair, I have a quick question.
Yes, Senator McClellan.
Megan, you said that the overpayment waiver form would be posted soon with some frequently asked questions and guidelines. Can you give us an estimate of how soon or when that might be?
Sure. So that starts July 1 due to the legislation. And so we're hoping to get it up June 1st or the first 2 weeks. We did send out talking points specifically to the legislative offices. Let me know if you didn't get those around. And we're going to clarify it, a little bit of a legal language just to make sure, but the FAQs will be as well. And then we're going to communicate through the constituents we do robocalls, text messages, as well as we post documents to their Gov2Go, which not everyone has access to. It depends on which unemployment insurance you are. I do want to address, so I do talk to constituents every single day. I am aware of the situation. We are working as hard as we can to increase our call center capacity. Again, with additional funding, I really appreciate that, as well as the movement through our Visant. Back before the pandemic, we actually had merit hiring status. We could not hire third-party contractors until they released that flexibility, and that flexibility was actually supposed to go away in December. But thanks to our congressional delegation, Congressman Byer was actually the one who helped push it through to have. So we do have 2 different call center contracts. We have a third RFP out there as well as we move to the new call center. So we are working on that. And I do hear that well. We're still taking 100,000 calls a week, even though we have about 4% of people that have not received benefits. I do say we are looking at better communication. So our call center staff, even though they do get through, they don't have all the information individuals are looking for, specifically where am I in the adjudication process? You know, I get questions, what did my employer say about me? Why did I lose my benefits? And that information. And so that is something they cannot tell you, which is very frustrating. And I get that. The other thing is we are going to open face-to-face VEC offices, again, June through my career work centers, in July, and we'll be doing appointments only, 10 to 15-minute appointments. So someone can actually go to our centers and talk to someone face-to-face and then figure out how we can triage those individuals. If it's, PIN numbers and changing addresses also clog our call center. That's why I'm really excited about the UI modernization technology. That is something that most people do online when you forget your password. We don't have that capability. You have to call the call center. And we mail the PIN numbers. That's required by law until July 1. So there's just, some of those issues that hopefully will be resolved. We know communication has been our largest challenge, and we've been working on that. VEC never sent a text message before until this pandemic about, different communication strategies. And we are looking forward to this modernization technology to come into the 21st century, because I think some of the largest issues in the clogs in our call centers are specifically around communication, access of information, specifically to their benefits or to their application as well. But we are trying to also move everyone through the adjudication process so they'll stop, that's the ultimate goal, because then that's when we'll get a smaller call load as well as calls to your offices.
Madam Chair?
Senator Evan.
If I could just follow up with one real specific. One of the frustrations I've heard from people is that a lot of people, rightly or wrongly, don't pick up their phone when they don't recognize the number because they think it's a scam, or someone trying to sell them an extended car warranty or something they don't need. And if there was a way that when the VEC calls someone and leaves a message, instead of saying, call us back at this main number that you could hold for 4 or 5 hours and not get an answer, that they could have a number for people, an inbound number for people that you've actually left a message for, where they might have a chance of speaking with a human in a quicker way. I think that might go a long way.
Senator, I think that's an excellent suggestion. That might be something I'm thinking about with our different contracts. Maybe one of our contracts specifically can do that work. Again, we have to look at what access they have to specific accounts. Again, it's always a challenge with their contracts, specifically security reasons around information that they can see within our systems, as well as the different technology systems don't really talk to each other. They will in October, but also the access points. And so that might be something, a specific call with a certain vendor that can handle more complicated issues. And that's kind of also, we're trying to elevate and do training in our call centers. We do have a little bit of a turnover, obviously, this year in call center. It's a tough job doing this every single day. And so constantly training new people and moving them in. We've had a little bit of a challenge with, but I think it's better now.
Okay, well, thank you for your work on moving the 85%. It's just that 15% and those people who are frustrated. I've had people actually tell me they lost their homes because they couldn't get their unemployment benefits. And we just appreciate everything you can do to expedite.
Senator Marsden.
Thank you, Madam Chair. Megan, how long does it take to train somebody to do this? And is there any possibility, in case we ever hit something like this again, that we could have a sort of a reserve core of folks that we pay to train and have them kind of in reserve to kind of plug the line when things start to get dicey?
So specifically with the backlog for adjudications, to actually be an officer, it takes 18 months to train somebody. We definitely, it's a long time because these laws are very complex, right? And you almost need paralegal, lawyer. I know many of you are lawyers, not that level, right? But you have to have that mindset. So what we're trying to do with these new contracts, we have talked to Maryland, who has expanded their contracts. And I will say that Maryland had a contract for 600. They said after 300 people, they couldn't find quality people. The quality went down, so we have to balance that out. I think we have, I hate to say, we probably have smart people in Virginia, and I think we can get to where we need. So we are really doing quick training that's going to take a week and really isolate one issue, right? Let's say it's a person who quit their job, right? That person, that's all they're going to know. What does it look like? Is that, when you quit your job, you're supposed to be ineligible. Is there anything else? Can we just deem them ineligible? We do know anyone who's moving through the adjudication process, most people, 80-ish, 90% will be ineligible and not actually receive benefits because of the laws. So, there's different flexibilities we have in good costs. And so there needs to be a little bit of review of that, but we'll have probably specialists do that. But hopefully we'll get people trained in 1 or 2 weeks on like one little issue, and then you get all those hearings in that issue.
Thank you.
Is there anyone else? Okay, well, thank you, Dr. Healy. I know you've got probably the toughest job in government right now, and we appreciate all the work you're doing and your staff. We just need to deep breathing and improve the system. But thank you so much.
I'm going to start with my new role, embedding myself over at VEC and just, a little bit more, a couple days a week. So we're going to get this resolved soon. So I can't wait to report back on it.
Great. Thank you. Thank you. Okay. Well, next we're going to hear from Joe D'Amico, who's going to tell us about our Capitol Square project. Joe.
Joe, you're muted.
Yeah.
Well, let me try the introduction again. It sounded good to me the first time. Good morning, Madam Chairwoman and committee members. I'm Joe D'Amico with the Department of General Services. Thank you for the opportunity to come before you to talk about the construction projects at Capitol Square and also provide you an update on the forensic science and Office of the Chief Medical Examiner capital project. None of which, any of these projects would be where they all are today without the support and funding of the General Assembly. So we thank you for that. To start out with talking about the Capitol Square projects, I debated with my team over here how best to try to present all of what's going on around here at Capitol Square, really to give you a flavor of how much work is going on. And so we settled on attempting to show you a video of the 8 active construction projects underway. It's about 1.5 minutes. We're going to show that video here in a minute. I'm going to attempt to keep pace with each one of these projects as we go through. But then after the video, we'll slow down a little bit and go through each project in a bit more detail. So with that, if we can go ahead and start the video. This project is to replace the sidewalk adjacent to the west side of Capitol Square and along 9th Street from Bank Street to the Capitol entrance.
Yes.
Next is the entrance to Capitol Square. This area is being prepared for the installation of a fence line to replicate what was there in 1862-5 and the construction of a new Capitol Police Post. Here's the construction site to replace and repair the skylight in the Capitol Plaza, where we have experienced water leaks into the Capitol extension. This is what is known as the Ferguson Building, a building once used by DGS as a facility maintenance shop, being renovated to house the Capitol Police K-9 unit. Morrison Row, 3 townhomes fronting Governor Street behind the Executive Mansion. The tower to the right is to provide ADA access into the facility. Old City Hall, covered by scaffolding to repoint, repair, and clean the exterior of this 1890s National Historic Landmark. Interior renovation is underway. Here's excavation underway for the new state parking deck. The site fronts Broad Street between 8th and 9th Streets. Here's the location of the tunnel to the new GAB. And then finally, this is the new General Assembly building. Significant progress has been made on the exterior, putting on over 1,200 pieces of precast paneling. Scaffolding is going up to the 1912 facade. And I'm happy to say that power has been energized in the building. We're off temporary power, so we're making great progress with the GAB building. I know that was quick, but I hope it gave you some sense of we are very busy here at Capitol Square. Next slide, please. So let's take a little deeper dive into these projects and slow things down a little bit. What we'll do here is talk about improvements to the 9th Street sidewalk, to North Drive, replacement of the skylight, talk a little bit about the Ferguson Building, renovation of Morrison's Row, Old City Hall, a little bit more about the 9th and Broad Street parking deck, the General Assembly building, and then we'll talk a little bit about the new tunnel from the GAB to the Capitol. And then lastly, we'll talk a little bit about the forensic science and Office of the Chief Medical Examiner facility. And Madam Chair, I'll be happy to pause after the Capitol Square projects to take questions or jump right into the forensic science. Your call, however you want me to handle that, works for me either way.
Okay, let's have questions after the first part and then again after the second.
Perfect. Thank you, ma'am. Next slide, please. So improvements to the 9th Street sidewalk. What we'll be doing is installing light fixtures to match those around Capitol Square, replace the concrete sidewalk with a brick herringbone pattern. For those of you that have walked up the Governor Street side of Capitol Square, you'll see that nice brickwork that we have between Bank Street and Broad Street will be the same brickwork that we'll have going up on the west side of Capitol Square. Many of you have walked in this area before prior to this work, and you've seen the undulating concrete. It has been a trip hazard. The planters there became trash receptacles. It became a maintenance issue. We're really hopeful and believe that the end result here is going to be a much more inviting way into the Capitol road entrance to Capitol Square. Design is complete. Construction began the second quarter of 2021, and we expect to have this construction complete the third quarter of 2021. Budgeted cost was $1 million for that work. Next slide, please. Just some pictures showing the area. Upper left-hand corner, you can see the existing condition, which will be replaced by the brick pavers. To the right is the work underway, and then the bottom left shows the length of the work from Bank Street up to the Capitol Square entrance. Next slide, please. Improvements to North Drive security. What we're preparing here is to install a new fence that features the historic 1865 entry gate that once existed on Capitol Square. We'll be replacing post 1, which many of you are familiar with, that was at the base of the equestrian statue. Will now be pulled forward and off to the left as you enter Capitol Square, and I'll show you a rendering of that here in a moment. We're going to replace the asphalt entry area with brick pavers and granite. The timeline to complete that work, or to construction began second quarter of 2021. To complete that work, third quarter of 2021. The Capitol Police Post should be operational the fourth quarter of 2021. The budgeted cost was $2.4 million, and it was authorized in Chapter 854. Next slide. So here you see is the rendering of the 1865 gate that we will be replicating. Below that, you'll see just kind of under the tree line, but the Capitol Police Post as you enter into Capitol Square off on the left-hand side, with parking for 2 emergency vehicles as you come into Capitol Square. On the right, as you see the area as it looks today, we have it excavated and are moving forward as quickly as we can to get this work completed. Next slide. Skylight replacement. Many of you are aware of the issues that we've had with water coming in through the skylight and underneath the Capitol extension ceiling, and we'll show you a picture of that here in a minute. We've taken on a project to address those leaks, and right now it's going to require the replacement of the existing glass skylight. The design is complete. Construction began the second quarter of 2021. We will have this complete the third quarter of 2021. The budgeted cost for this work is about $2.5 million. Next slide. So on the left-hand side, you see pictures of the water damage that's coming from above that we just could not allow to continue in the current state. The existing skylight, you see the glass skylight where we were having some of the water penetration, has since been removed. And if you look off to the right under the tent, you'll see that we now have a concrete inlay in that space. We will be going back in with a skylight that is similar in design, but does not actually allow light to penetrate down through into the Capitol extension area. What you see at the bottom right-hand corner is now that area that's been closed off with concrete, and we'll be coming in with a new lighting system that will give the same effect as though light was coming through a skylight. Next slide, please. Renovation of the Ferguson building. It's a building that's existed on Capitol Square for about 76 years. It's in between the Madison building and Monroe Tower. As I said in our opening comments, it's a building that was once used by DGS for a facility operation. We are now going to renovate it for a Capitol Police K-9 unit facility. Construction is underway here. We expect to complete that work the third quarter of 2021. The budgeted cost for that is $2.9 million. Next slide. So you'll see here pictures, upper left-hand corner is what the building looked like when it was used as a DGS facility. You'll see to the right the current state of renovation, and then below a rendering of what we'll see once the renovation is complete. Next slide, please. Renovation of Morrison's Row, National Register of Historic Places facility. Row homes were built in the 1850s. They sit off of Governor Street behind the Governor's Mansion. When completed, we'll have about 23,000 square feet of renovated space with an additional 7,000 square feet that will be included with the addition that we're adding for ADA compliance issues. That facility will house state agencies as tenants. The design is complete. Construction began the second quarter of 2020, and we will have this construction completed the fourth quarter of 2021. The budgeted cost here is $15.5 million. Next slide, please. So here in the upper left-hand corner is what the facility looked like before we began renovations. If you look off to the right, you'll see where we are in the current state on the exterior. And you'll note how the building really pops just with where we are today in restoring the exterior. The bottom left-hand corner shows you a rendering of the completed facility. And then the bottom right gives a look into the interior where we've already started in renovating the plaster walls and putting in the new ceilings with the new lighting in this historic space. Next slide, please. Renovation of Old City Hall. Old City Hall, many of you know, is a National Historic Landmark. We are renovating this facility, both the exterior and the interior, to the Secretary of Interior standards. The tenants of that building will include the Division of Capitol Police, Division of Legislative Automated Systems, the Capitol Square Preservation Council, and the Department of Human Resource Management. This facility was built in the 1890s, used by the city as City Hall. The Commonwealth acquired this building in 1970-71 from the city, and it has not gone through a major renovation of this magnitude since that time. Construction began the first quarter of 2020, and we expect to have construction complete the first quarter of 2022. Budgeted cost for this work is $64 million. Next slide, please. So to the left, you'll see Old City Hall prior to the renovation. To the bottom, you'll see where we are underway with the scaffolding. The top right is a cupola that we've taken off of the top of the building to put it on the ground to restore that feature. And then here in the bottom right is the basement of the building, which we had to jackhammer out the entire concrete basement because we found that we didn't have a solid foundation. And there wasn't an easy way to get this concrete out of the basement of Old City Hall. We actually had to take it out in 5-gallon buckets. So very, very time consuming, a lot of labor going into this historic renovation. Next slide, please. The 9th and Broad Street parking deck. Once completed, will be a 500-car parking deck. 300 of those spaces will be assigned to the legislature, 200 for the executive branch. It'll have 7 levels, 6 above, grade 1 below. There'll be 25 electric charging stations in the facility. On the first floor fronting Broad Street, there'll be office space for the Division of Legislative Services, the Commission on Youth, and the Chesapeake Bay Commission. We will also have a tunnel from this parking facility to the new General Assembly building, and that is found in that one level below the parking deck. Design is complete. Construction began the second quarter of 2021. Construction will be complete the third quarter of 2022. It will be ready for the 2023 General Assembly session. Budgeted cost at $34.9 million. Next slide. So drawing your attention first to the right-hand side, you'll see where we've started the excavation of the site. You'll see that the Barbara Johns building to your left, Broad Street to your right, and then 9th Street back towards the bottom of the picture. And actually, this picture has been taken from an upper floor on the new General Assembly building. To the top left, you'll see a rendering of the parking deck on your right in this picture and how it relates to the General Assembly building. And then the bottom left hand is a look back at the building coming from the northeast side of Broad Street, looking back towards the corner of the building. Next slide. General Assembly building tunnel to the Capitol. So in the 2020 session of the General Assembly, there was authorization for DGS to move forward with a tunnel from the General Assembly building, the new General Assembly building, to the Capitol extension. The tunnel will come out of the south side of the building and then go east towards the Capitol extension. It's going to be approximately 600 feet in length. Because of the length of the tunnel, by code, we have to provide an exit stair as part of this construction. The exit stair will be placed on Capitol Square. You'll see a rendering of that here in a minute. The way that we're going to parse this work out is it'll be done in two phases. Phase one will take the tunnel from the new General Assembly building to the emergency exit stair. And then we'll stop there for some period of time and then pick up with phase two from the emergency exit stair to the Capitol extension. The reason why we're pausing between phase one and phase two is because we have a General Assembly session in between phase one and phase two. And you'll see when we get into the phase two discussion with the renderings that it's going to be a pretty significant amount of work that we're going to be doing on Capitol Square, running right across North Drive into the west entrance of Capitol Square. The timeline right now, current phase to complete would be the second quarter of 2022, and then phase two will complete the fourth quarter of 2023. The budgeted cost is $25 million, and that money in authorization was included in Chapter 1289. Next slide. So let me draw your attention first to the picture up in the right-hand corner of this slide. What you'll see here is the length of the tunnel from the General Assembly building to the Capitol extension. And if you can see the dotted line just kind of on the upper part of the screen of this slide, just beyond the historic Capitol fence, that's where phase one and phase two stop and then start. So phase one will come out of the GAB, stop at that dotted line, and then phase two pick up from the dotted line and then run it to the Capitol extension. If you look to the left, you'll see a rendering of where that exit stair will actually come up out onto Capitol Square, which is just north of the equestrian statue. And then the bottom is just a little closer rendering of the stair, and what you see there to the south of the stair is a couple benches that then front the sidewalk that surrounds the circle at the equestrian statue. Next slide, please. The General Assembly building. So we've got one floor below grade, and that one floor connects to the tunnel to the parking deck, as well as there is the House committee room in the lower floor as well. There'll be 14 floors above grade. The building in size is 422,000 gross square feet. On the first floor, we will have food service. The building has been enhanced with security design. We've worked very closely with the Capitol Police on that design. We will have the tunnel to the new 9th and Broad Street parking deck, and then the tunnel to the Capitol. Construction began in the first quarter of 2019. Construction will be complete the third quarter of 2022. That lines up well with the parking deck completion. The building will be ready for the 2023 General Assembly session. The budgeted cost for this project has been $275 million. Next slide, please. On the left, you see a rendering of the completed project looking north from south on 9th Street. To the right, you'll see the actual construction in progress. Next slide. Right here, we wanted to show some of the current in progress work and how it looks today to the renderings on how to look here next year. On the left-hand side, this is the first floor entry into the General Assembly building off of the Capitol Police security screening area. The bottom is the rendering. The picture above shows how it looks today. To the right is the second floor common area that opens up. The ceiling opens up to the third floor. It's kind of hard to see in the rendering, but you can kind of see the rails of the third floor on this bottom rendering if you look up at the top. And then if you look off to the right, these very large windows in this area provide an inviting view of the Capitol. So we believe this will be a nice area for our visitors coming to the General Assembly to watch the legislature do its work. The upper picture shows the actual state of this area today in the construction phase. Next slide, please. The picture on the left here kind of gives us a look at the new General Assembly building, standing over in front of Old City Hall looking to the west. And why I wanted to show this picture is what this shows is a much more, I believe, pedestrian-friendly and inviting area outside the main entrance of the new GAB. This brickwork and this inviting feel, we don't have a picture of it here, actually extends beyond Old City Hall to the Patrick Henry building in our renovation of Old City Hall. So what we're starting to see here is a much more, again, inviting, pedestrian-friendly area for visitors to Capitol Square and also for people to watch government operations. The picture on the right hand, the bottom right here, shows the tunnel in its current form that goes underneath 9th Street. Soon, I would say probably in the next month or two, where you see this tunnel blocked, should be opened up. We should be digging down from the parking deck side of the street to open up that area to start then laying in the actual final tunnel structure into this area. Next slide, please. All right, so Madam Chair, let me stop there. That completes an update on the construction projects at Capitol Square, and I'll be happy to take any questions anybody would have.
Are there questions on Capitol Square? Got to say, it's beautiful. I can hardly wait to be in it.
Madam Chair.
Yes, Adam. Senator-
Everything looks great, Joe. I did want to ask, though, just curious, the new building, you said it's about 422,000 square feet. Do you know offhand how old the old General Assembly building was? How large it was in terms of square
The
feet?
previous General Assembly building, Senator Eben, Madam Chair, the previous General Assembly building had about 330,000 square feet.
Oh, great. So it'll be much bigger then. And if I could follow up, Madam Chair,
Senator Eben.
on the tunnel, am I right to assume that part of the purpose of the tunnel is that tourists who come in and get screened through security can then go through the tunnel and not get screened before they enter the Capitol? Is that the part of the thinking there?
Senator Eben, Madam Chair, of course, that's a decision for the clerks to make. But it is my understanding that once that tunnel is complete, once somebody is screened in to the General Assembly building, or if they're screened in at the Capitol Extension, right? Because we're still going to have access to the Capitol through the Capitol Extension along Bank Street. But yes, it's my understanding once you're in the two facilities that now are connected by the tunnel, you would have been through screening and you should be able to move freely through both facilities.
Thank you.
Further questions? Okay, now let's do the Forensic Science Lab.
Yes, ma'am. Thank you very much. So what I'd like to do here is step the committee through the purpose of this facility, the deficiencies and limitations of the current facility that we have, the General Assembly's capital authorizations that actually began back in 2014 to move this project forward, and then the status of where we are to move the project onto construction. So at this first slide, just a real quick look at the purpose of this facility for the Department of Forensic Science. It's to provide a space to conduct laboratory testing services in criminal matters in the Commonwealth of Virginia. It also provides training space to advance the understanding of forensic science in order to promote public safety, not only at the state level, but also at the local level. Next slide, please. So in addition to the forensic science, thank you. So in addition to the forensic science operation occurring in this facility, you all know that we also have the Office of the Chief Medical Examiner working in this space. For OCME, this space provides an opportunity for autopsies to occur to certify cause of manner of death. It also provides training to educate peers and professionals on subjects related to death investigations. Next slide. The existing facility is located on 5th Street. It's about 134,000 square feet, located on 2.35 acres. It was constructed as an as-built facility by the Biotech Authority in 1998. So this building has now been in use about 23 years by DFS and OCME. What we found, we DGS in working with both agencies, that the facility does not provide adequate space for the growing state-of-the-art equipment needs, as well as the staff numbers that have doubled in size over the years. Next slide, please. Because of those deficiencies, back in 2014, the General Assembly authorized DGS to work with Forensic Science and OCME to design an expansion of the existing facility. And then in 2016, the General Assembly actually authorized and provided funding, $127 million, to complete the design and construct the expansion. When DGS got into completing the design with the two agencies, we quickly came upon other deficiencies at the site that would not enable us to complete the expansion for the intended mission of forensic science and OCME. So in 2018, we came back, had a discussion, talked about the situation, and in 2018, the General Assembly recognized that there was an issue with the site and authorized DGS to look for a new location outside of the city to build a new facility. So now we've gone from a renovation at the current site to now finding a new property and building a new facility. Next slide, please. So here's some of the reasons that the existing site did not work for DFS and OCME. When we got into the detailed design, we identified that there were significant upgrades of the existing building that were required to meet fire and hazardous material building code issues. The fire ratings required extensive firewall construction, or actually a new building to be built on the site that required separation from the existing building by 30 feet, and then we would have had tunnels connecting the two buildings together. Expanding the OCME space at that current location would have created their work to occur on multiple floors. So autopsies, instead of occurring in a single isolated area, would have had to have occurred in multiple areas and then moving specimens around hallways to get to other labs. So it just wasn't conducive for their operations. The underground parking was not fiscally feasible or practical due to very high water table and toxic soil levels that we found. And also there was inadequate fire department access to the facility. Next slide. So 2019, with the authority in 2018, 2019, DGS conducted a competitive process to purchase land for a new facility. And I'll talk about that at the next slide, where that's located at. Since that time, we've been through a schematic design with the two agencies, and we've completed our preliminary design with the two agencies, DFS and OCME, and we now have a cost estimate for the new facility at the new site. Next slide, please. So the site that we've purchased is located in Hanover, Virginia, off the Times-Dispatch Boulevard location. It's about 281,000 square feet on 21.8 acres. The new facility will provide adequate space for parking as well as land for future expansion. It also will enable all of the state-of-the-art technology for equipment and the building systems required by both DFS and OCME. It'll also be able to accommodate the staff that is, like we talked earlier, has doubled in size and will provide some additional expansion space. And this space will also provide enhanced security and monitoring for the two agencies in the facility. At the bottom right of this slide, you'll see a rendering of the current design sitting at the Hanover site. Next slide, please. So, new facility funding. Again, we've completed the preliminary design, and in our capital outlay process, once an agency completes the preliminary design, we also develop a cost estimate that's used for the basis of the budget going forward. So the preliminary design cost estimate we have is $201.5 million. Recall that I mentioned the General Assembly has previously authorized in 759 $127 million to address the forensic science facility need. So that leaves a supplemental funding need of $74.4 million to move this project forward. In the 2020 special session of the General Assembly, the General Assembly authorized a supplemental funding pool of $170.7 million. $25 million of that was specifically authorized for the GAB tunnel, which we talked about. But the balance of that $145.7 million was authorized as supplemental funding for previously approved capital projects. So the General Assembly recognized that previously approved capital projects, there could be a possibility that we had cost overruns for many reasons. One just being inflation. And so instead of having to bring a capital project coming back to the General Assembly, at the next year budget cycle, the General Assembly authorized this supplemental funding pool, although limited, and gave the authority to the Director of Planning and Budget to allocate these funds to supplement a capital project pool or a specific capital project. So the next bullet here, again, the funds were intended to transfer between a capital project pool that contains multiple capital projects or a specific capital project, including DFS and OCME. Next slide, please. So with that authority, DGS, we briefed the DFS OCME facility funding need to the Capital Outlay Advisory Committee. Just a refresher here, the Capital of that Outlay Advisory Committee was a committee that the General Assembly created in 2008. It includes 6 members, the 2 Money Committee staff directors, the Secretary of Finance, the Director of the Department of Planning and Budget, the DGS Director, and the SHEV Director. This committee's charge is to provide oversight of capital projects that are in progress and make recommendations to the General Assembly and to the Governor on future capital projects. So we, DGS, briefed, again, this funding need to this oversight committee, and the committee did agree that the funding does exist and the authority exists in Chapter 56 to move these funds to the DFS OCME facility project. However, the committee also agreed and made the recommendation that this project be briefed to the money committees. DGS briefed the House Appropriation Committee yesterday with the same set of slides, doing this, of course, today with you, Madam Chair, and the committee members, to make you aware of this need, to make you aware of this recommendation. And the last bullet here, that these funds would be transferred to fund this project, to keep it on the current schedule, unless otherwise directed, and to keep it on the current schedule to avoid additional annual escalation costs of $8 million. So, Madam Chair, that's the DFS OCME update, and I am happy to answer any questions as it relates to this project.
Thanks, Joe. Are there any questions on this? There's some things you'd rather not do, but you have to do, and I think that this is in that category.
Yes, ma'am. This project obviously is one of interest to the General Assembly since 2014.
Right.
It's taken us a while to get it right. I think we're there, and I appreciate the committee's understanding, and I appreciate your patience in listening to me to get through these projects.
Well, they're all actually very exciting and things that I think all of us are looking forward to having finished. So thank you so much. April, do we have time? We have 15 minutes for the look at the American Rescue Plan, or should we put that off till next month?
Madam Chair, I think that's your call. We could do a truncated version if you'd like, or we certainly could wait to June to do it either way.
Why don't we do a truncated version now? And in June, we'll have more information, I hope, where we can have a more thorough presentation.
All right, I'll start it off then, Madam Chair. Thank you. We'll do a quick version of the American Rescue Plan Act and some of the impacts for Virginia. What I will say is Secretary Lane did cover a number of things, so I'll try to move very quickly through my portion of the presentation. This includes the topic order. And I will also mention there's a Word version of the summary that went out to the committee members that has draft on it. As you know, the guidance does change from time to time, and we probably will get some updated numbers. So we'll continue to provide you an update on that. The other document received was just a 2-page fact sheet from U.S. Treasury about it as well. That is a sort of a nice summary that you might want to share with constituents. Just moving forward quickly, this is the 6th federal stimulus bill. It was signed on March 11th. It's got a number of provisions. Again, I won't belabor that since Aubrey covered it. This is just a look at the prior actions to date. So you've got some historical information. This is a summary of those various federal stimulus funding bills. And just to also mention, there is the possibility of the infrastructure bill as well. I'll move directly into the direct state support. There's the state fiscal recovery fund. As Aubrey mentioned, Virginia's allocation rounds up to about $4.3 billion. It's got a variety of uses, including responding to the COVID health emergency and the negative impacts to provide assistance to households, small businesses, nonprofits, or aid to industries such as tourism, travel, and hospitality. It can also be used for hazard pay to essential workers, provision of government services to the degree a state had reduction in revenue, necessary improvements in water, sewer, broadband infrastructure. And then there are some restrictions. You can't be used to pay state tax cuts, fund debt service, or make deposits to pension or rainy day funds. Just another mention of, I will say that Adam Rosatelli on our staff has the local piece at the end of the presentation, so he also might be able to answer some of the questions that came up during the Secretary Lane's presentation. I'll just quickly cover this other pot of money, the Coronavirus Capital Projects Fund. Virginia's allocation rounds up to about $222 million, and it can be used for critical capital projects directly related to work, education, and health monitoring, including remote options in response to the public health emergency. Madam Chair, I will quickly turn it over to Charles to move forward on tax and unemployment compensation provisions.
Thank you, April. And Madam Chair, we can go to slide 11. Of course, the legislation includes an additional third round of stimulus payments, $1,400 per person, including dependents. Payments phase out, I think $75,000 for individuals, $150,000 for married couples. Let's move to the next slide. Unemployment compensation, we heard quite a bit about this earlier, so I'll hit just a couple of high points. The Act does extend the pandemic-related insurance expansions through weeks ending on or before September 6th, and in our case, that would mean that benefits end on September 4th. One thing that wasn't covered was that the Rescue Plan Act contains a provision that exempts the first $10,200 of unemployment benefits received in 2020 from income taxes. Those benefits are at the state level not taxable, but ordinarily would be taxable at the federal level, and that exclusion is retroactive, applying to unemployment benefits received last year. And you might remember that there was an issue of some surprise tax bills where claimants were not expecting to be taxed on that, and only applies to individuals with incomes below $150,000. Next slide. There are a number of tax-related changes included in the Rescue Plan Act, one of those being the child tax credit in tax year 2021. The law increases the amount of the child tax credit, makes it available for 17-year-old dependents, and makes it refundable. Prior to 2021, the credit was worth up to $2,000 per eligible child. This would increase to $3,000 for dependents age 16 to 17 and $3,600 for dependents age 5 and under. There's also earned income tax credit provision, primarily relating to childless workers. So in 2021, more childless workers and couples can qualify for the EITC. The credit is nearly tripled for these taxpayers, and for the first time, it's also made available to both younger workers and senior citizens. The maximum credit with no dependents is now just about $1,500, whereas it was about $540. The child and dependent care credit is also included in the Act. It raises the dollar limit on employment-related child and dependent care expenses to $8,000 for one qualifying individual and $16,000 for two or more. It also increases the percentage to 50%. Next slide. There are a few other provisions, which in the interest of time, I think I will just move on to the next slide, slide 15. And actually, so there are several provisions in the Act that provide assistance to individuals who may be behind on rent or mortgage payments, and some of these are listed on this slide and the next one. The largest of these are $21.6 billion for emergency rental assistance. We're expecting over $400 million allocated to Virginia. This is on top of the $524 million that was included in the Consolidated Appropriations Act. There's also $10 billion nationwide for Homeowners Assistance Fund. This is intended to help homeowners with mortgage bills, tax insurance, and HOA fees. Next slide. I think this is a good point to address one of the questions that came up earlier in the presentation. So earlier, we talked about the $350 billion that's eligible for state, local, territorial, and tribal governments to respond to COVID-19. Virginia is expected to get an allocation of $4.3 billion, and there was a question around, how much of that is intended to go to hospitality and tourism-related industries. Well, the way the text reads is that the state support allocated directly to the state can be used to respond to COVID-19 public health emergency or its negative impacts, including assistance to households, small businesses, and nonprofits, or to aid impacted business such as tourism and travel hospitality. In other words, the General Assembly can appropriate funds from the state fiscal recovery fund that's allocated to Virginia to aid businesses, but the Act doesn't say that it must be appropriated for that purpose, and nor does it say how much. However, as we go to the next slide, in addition to this direct aid allocated to the states, there are a number of provisions that are designed to assist businesses in these particularly hard-hit areas. So the first one of these is the Paycheck Protection Program, which I'm sure you're aware of. The American Rescue Plan Act adds another $7.3 billion to this program. Next slide. And there's some other provisions for small businesses, $28.6 billion nationwide that are intended to go into a restaurant revitalization fund. This is meant to assist restaurants, bars, and other food and drink vendors. The program provides funding up to $10 million per businesses, with no more than $5 million per physical location. There's also $15 billion nationwide for the Targeted Economic Injury Disaster Loan Advance Grants, Shuttered Business Operators Grant Program, more than $16 billion. This is intended to help venues such as museums, concert, theater, similar venues. There's also $10 billion nationwide set aside for Small Business Credit Initiative, and $3 billion for competitive grants to economic development assistance programs. Now, this in particular, the $3 billion in competitive grants, the ARP Act does stipulate that 25% of that should be used for assistance to states and communities that have suffered economic injury as a result of job and GDP losses in the travel, tourism, outdoor recreation sector. So that is the one place in the Act that stipulates that 25% of the money should be used specifically for tourism and travel. And I believe that completes the section of the presentation under my area, so I'll hand it off to the next presenter.
Turning to education, the American Rescue Plan provides Virginia about $3 billion for education. And from the three major packages, we've received about $5.2 billion total. Moving to K-12, K-12 school divisions will receive about 2.1 billion. The divisions will receive exactly 1.9 billion in their local allocations, and then 10% or 211 million will be reserved by the Department of Education for statewide efforts. Moving to the next slide, there are several maintenance requirements that we'll continue to monitor to make sure that we meet them in the new ARPA and Maintenance of Effort Fund. Moving to slide 25, there's 46 million for emergency assistance for non-public K-12 schools. This will be administered by the Virginia Department of Education to assist non-public schools. Moving to higher education on slide 26, Virginia institutions are estimated to receive 844 million. Our public 4 years and 2 years will receive 669 million of that 844 million, and 50% of that has to be used for emergency financial assistance grants that go directly to students. The maintenance of effort also applies to that, so we'll continue to consider. Moving on briefly to childcare, there's approximately 794 million in the American Rescue Plan for Virginia to provide childcare, and to date, Virginia has received approximately 1.1 billion in federal funds to support childcare providers and to ensure access to childcare. And I'll turn it over to Mike for Health and Human Resources.
Thanks, Dylan. HHR, moving to slide 29. This just gives you the high-level overview of the grant. The total here on the 60 million will be higher once all the allocations are completed for all programs, which they're not yet. Moving to slide 30, this just talks about some of the nutrition programs. SNAP is extended benefit increase through September, and then there's some additional funding for the WIC program. Moving to slide 31, public health provisions, there's additional 77 million provided to Virginia for vaccinations, 257 million for testing specific to schools. There's additional funding also for the public to expand the public health workforce, and nursing home strike teams as well. Moving to slide 32, in human services, there's additional funding for LIHEAP. There's also a new pain emergency, 15 million to provide short-term benefits to children and families. There's 500 million nationally provided to states to help with water and wastewater assistance and low-income families to pay those bills. And then, of course, assistance to elderly programs also received additional funds for supportive services. Moving to slide 33, please. Thanks. So the major thing that's where there's discretion within HHR is the home and community-based waiver services. So for a 12-month period, the feds are going to provide a 10 percentage point increase in the federal match rate. And the state money that is freed up with that is supposed to be put back into those home and community-based waiver services. So this is one area of HHR that during the special session, the General Assembly will have to decide whether they do rate increases or what they decide to do with those funds. There's also a bump up in the federal match rate for mobile crisis intervention services under Medicaid, and then a new option under Medicaid to provide COVID-19 treatment coverage for the uninsured, which is an expansion what they used to, of just providing testing, which a previous bill had provided. Moving to slide 34. Just to note some healthcare provider provisions, there is specific money that goes directly to community health centers, about 80 million to Virginia's community health centers. Then some additional funding will eventually be provided to support rural healthcare providers as well. Next slide, please. And just lastly, on HHR, the mental health block grant and substance use block grant both received about close to $35 million each of additional funding to support efforts to deal with those issues resulting from COVID-19. With that, Madam Chair, that concludes HHR, so I'll turn it over to Jason for transportation.
Thank you, Madam Chair. I can quickly move through these. All of the funding in transportation is non-discretionary, and it mirrors the CARES Act approach, and not like the CARISA money that we approach in the special or in the regular session. And it doesn't appear that any of the funding available would allow us to offset any of the general funds that were provided in the 2021 funding initiative. At the Federal Transit Administration level, there's about $30.5 billion nationally. Those grants are going to go directly, mostly to the transit providers in the urban areas. Same thing with the Metro money, it will go to WMATA and then to the regional operators. Next slide. With the FAA and the aviation grants, similar to the CARES Act, there's $8 billion nationally for airports through the FAA, Those apportionments are not released, haven't been yet released, but those again will go directly to the airports, including the Metropolitan Washington Airports Authority, which will have about 166 million split between Dulles and Reagan. Next slide. And then nationally, Amtrak received about $1.7 billion, with 17 million going to state-sponsored services. Virginia should get around 12 to 13 million for its Amtrak, state-sponsored Amtrak services. Those will be appropriated, but in the process described by Secretary Lane, it'll be allocated by CTB and will be sort of a de facto appropriation in the session. That should complete transportation.
Just some other provisions, moving to slide 41. For Veterans Affairs, there's the ARP provides $500 million to states to help construct or renovate state homes for veterans. Not sure that Virginia would get any of that, but that is an option. And then there's $250 million, which would benefit Virginia to support the operation of state facilities. So that would help us support the 2 facilities that Virginia currently has in operation. But as of yet, we do not have an allocation for Virginia. Moving to slide 42. And then for disaster emergency funding, the disaster relief fund at the federal level gets $50 billion that's available to help assist states. One thing to note under that fund, so if you hear about this, is it does provide funeral assistance to households if they experienced a death related to COVID-19. So that's something that does benefit individuals through that program. And then there's just some additional funds for the Emergency Food and Shelter Program and Emergency Management Performance Grants. So with that, I will turn it over to Adam, who I think will conclude on the local side.
All right. Thanks, Mike. So yeah, just to quickly cover the local fiscal recovery fund. So you can see there's $130.2 billion total that's going out to the localities. Again, that's the metro cities, which is the large cities greater than 50,000 in population, what are called non-entitlement units of local government. And that's small municipalities, fewer than 50,000, and towns, and then counties. Same reasons. COVID is the reason we're getting the funding. Obviously, public health and economic impacts of that. Funding's available through December 31st of 2024. Next slide, please. Okay, so Virginia's getting about $2.9 billion. I know Secretary Lane talked about the actual specific allocations to the metros, the non-entitlement units, and the counties. Again, the funding was made available through the U.S. Treasury's portal on May 10th for the direct recipients, and those are the metro cities and the counties, and the state would be distributing the funding to the non-entitlement units of local government. Again, that's supposed to be within 30 days of having received the funds, and then you're allowed additional 30-day extensions. Hopefully that would be the case, that we'd be asking for additional extensions to get the funding out. But again, it is it's predicated on that funding not exceed 75%.
Madam Chair.
Senator Deeds.
Adam, I think you just answered a question that Aubrey Lane couldn't answer, and that's that independent cities with less than 50,000 will get their allocation from the General Assembly. They won't operate out of a separate pot for metropolitan cities. That's only for cities over 50,000 in population.
Madam Chair, yes, that's correct.
Okay, thank you.
You're welcome. So we're getting the first half is again, was made available to the direct recipients on May 10th, and the state is going to get its portion, which it will deliver to the non-entitlement units soon. And then the second half is to be made available, the second 50%, about a year later. And then I won't go through the funding amounts again. Next slide, please. Okay, so just to look at this, and I know I just talked about this a moment ago, but again, the metro cities populations of 50,000 or more, or is the central city of a metropolitan area. So that's technically the definition in the ARPA. It's distributed directly to cities using the CDBG block grant formula, but modified to substitute all metro cities for all metropolitan areas. So there's kind of a twist there. And then again, for the non-entitlement units, it's the towns in those small cities with populations less than 50,000. It's all based on the aggregate relative non-entitlement population for those amounts. There's a penalty for non-compliance if the state weren't to deliver these amounts within 120 days of having received them. And that financial penalty would come from the state's piece that would be considered debt that would have to be paid back to the treasurer out of the state's actual allocation. But again, don't anticipate anything like that happening. Next slide, please. And looking at the counties, so this is distributed based on population. And again, that's going directly to the counties based on their relative population. There's a hold harmless provision for urban counties, and I believe that's counties with populations in excess of 200,000, that they would receive at least as much as they would under the existing CDBG formula. So there's kind of a true up there. And then a couple other provisions with respect to counties that aren't units of general local government. I'm not sure that's applicable to Virginia. And then consolidated governments, which would be a city-county consolidated government, for example, that would receive payments under multiple revenue streams. The funding is used similarly as the state funding, again, to address the public health and economic impacts of COVID-19, provide premium pay or grants to eligible essential workers, replace lost revenue using that formula that was discussed, looking back at the prior fiscal year prior to the pandemic, and then moving forward, and then to make, again, necessary improvements in water, sewer, broadband infrastructure. And then there are a couple of explicit exclusions or prohibitions on the use of funds. One of those is an extraordinary deposit into a pension fund. It would be adding, unless there was a general fund revenue backfill, adding funding to a financial reserve, such as the rainy day fund or other financial reserve fund. Debt service costs, if it's back looking prior to a certain date, and then looking forward, fees and other issuance costs would be considered ineligible based on the interim final rule as well. Legal fees and then general infrastructure spending would also be ineligible. Next slide, please. And then just a couple of other provisions, similar, I believe, to the state portion about proration of adjustments between the recipients to make consistency with other act requirements. Localities can transfer funds to other entities, private nonprofit entities, certain public benefit organizations, and special purpose units of government, or to the state if they had a desire to do so. Local recipients are required to provide periodic reports detailing the use of funds and other information as required, and there's some difference in the reporting between the smaller localities and the larger localities, so it's not administratively burdensome for some of the smaller localities. And then there's with recoupment, a locality that fails to comply with the fund use requirements is required to repay an amount equal to that which was used ineligibly. Madam Chair, that completes my portion, and I think the entire presentation. We'd be happy to answer any questions you may have.
Thank you. I think I see Senator Barker's hand.
Yes, Adam, I think I saw on one of the slides where you talked about counties at the top of that slide that it said county, parish, or county equivalent designation, which would seem to me to cover all our cities, since our cities are county equivalents. Is that the proper interpretation?
Yes, sir. So, Madam Chair, Senator Barker, that's absolutely correct. Okay. So all of obviously, Virginia has a unique distinction of having 38 of the 31 independent cities nationwide, and the U.S. Census Bureau's definition for statistical purpose of a county includes independent cities. So all of the independent cities, in addition to a metro allocation or a non-entitlement unit distribution, if they're an independent city, is also going to get an allocation under the county portion of it. So using an example, we have a list of the metros. We haven't gotten a list of the non-entitlement units, so those other cities. And then the counties have been made available right now. So using Richmond as an example, they would get, I think, about $110 million under their metro city allocation, as well as about $45 million under the county allocation. So pretty big sums of money under both funding streams.
Yeah. All right, but that hopefully solves that problem. So, because that was a huge one. So,
yes, sir.
Okay, well, I want to thank all of our presenters today. Can
I ask one?
Sure, hurry.
Madam Chair, Adam, does that apply to cities with less than 50,000 people, independent cities?
Madam Chair, Senator Deeds, yes, that's understanding that all independent cities are going to be considered an other county equivalent under the county. So they would with an entitlement distribution. So they will be. So some of the smaller localities at their cities are likely going to receive that direct distribution under the county allocation component.
Right. Okay, good deal.
Yeah, I think given your answer, that would happen there, and we go down to Norton, which has basically 3,000 people. Right. But so we have a wide range of cities in Virginia. And I don't want them
Thank
shortchanged.
you very
So.
much.
Any other questions? We're way over time. Okay, well, I want to thank all of our presenters and most especially, frankly, our staff for all your work. We'll be back in a month and have hopefully a lot more information on the federal funding and have an extensive briefing at that point. So there being no more business, I'll adjourn the meeting.
Thanks, Janet.
Thank you.